Nike stock is down over 60% from its all-time highs, and in my view, the stock is over 50% undervalued right now. I built a 10-year revenue and free cash flow forecast, and my fair value lands at close to $128 per share. That's over 50% discount versus where it trades today, and suggests that we as investors could get a market-beating return of 18% per year. I'm also giving the stock a buy recommendation and 4 out of 5 stars as my rating. But why does one of the world's most iconic brands trade at such a steep discount? In this video, I'll break it down across 4 parts, starting with what drives Nike's business, followed by the financials, and then ending with the bull and bear case valuation, plus a technical analysis showing when might be the best time for us to enter the stock. So yeah, let's jump in. And let's start off by looking at the snapshot of Nike's financial performance over the past year. Now, we don't have 2025 fiscal year numbers as of yet, but we have 2024 year's numbers. And we can see that revenue and EBITDA have been up, and the company had a healthy EBITDA margin of 14%. However, the stock has over the past year dropped by 35% and significantly underperforming the broader market. And the company is headquartered in Beaverton in Oregon in the United States. So Nike isn't just a shoe company, it's a brand empire. From Air Jordans to Olympic sponsorships, Nike dominates the global athletic wear market. It has a unmatched direct-to-consumer strategy, a strong moat built on brand equity, and a long history of growing both revenue and free cash flow. And yet, Nike stock is down over 60% from its highs. Rising inventories, China weakness, and margin pressure have spooked investors. More importantly, Nike's aggressive push into D2C have cut ties with key retail partners like Foot Locker, and this has backfired. The shift has strained logistics, alienated parts of its customer base, and failed to deliver the margin boost investors have expected. But in my point of view, this short-term pain could have set up the stock as a great long-term buying opportunity. Now, with that said, the bull case is also quite clear in my point of view. Nike has global brand power. Nike's brand is ranked among the most valuable in the world, and that pricing power drives margins. And we also have emerging market expansion. Growing demand in India, Latin America, and Southeast Asia could drive the next decade of growth. But unfortunately, it's not all perfect. We have a bear case as well. We have consumer slowdown, right? We have rising inflation and lower discretionary spending, which could hurt apparel sales. We also have China risk. Sales in China, once Nike's growth engine, have weakened amid rising local competition and geopolitical tension. And lastly, we have margin pressure. Heavy discounting and rising logistics costs may continue to weigh on profitability at the same time as the B2B business has weakened. Now, let's move on to look at some historical financial data of Nike over the past 5 years, and I'll start off with the core financial performance of the company. And here we can see the revenue in blue, right, and the EBITDA in green. And in terms of revenue, we can see, yeah, it has grown nicely over the past few years. However, the EBITDA kind of peaked in 2021. Today, the EBITDA margin has dropped to 14%, so quite a significant drop over the past 4 years. The revenue has grown by 8% on average, and the EBITDA has grown by 14% on average. So that's a good sign, at least, that the company has become slightly more profitable over the past 5 years. On top of that, I also like to look at the debt sustainability of a company before I add it to my portfolio. And here we can see the debt in purple, right? And we can see the excess cash of Nike as well over the past 5 years. Now, this is actually a good sign because we can see that debt has declined by -2% per year. That's a good sign. And we can see that excess cash has risen by 7% per year. And as free cash flow will be a key part of our future valuation of Nike, let's also look at the historical performance in terms of free cash flow. And here you can see the revenue again, right, in blue. And instead of EBITDA, we have the free cash flow to equity performance of Nike over the past 5 years. And this is quite interesting because the free cash flow to equity actually peaked back in 2020. And ever since, the free cash flow margin has kind of declined from 19% all the way down to 7% in 2023, with a slight spike in 2024 suggesting that free cash flow is moving in the right direction. Now, the final historical chart I would like to show you has to do with the share performance of Nike. And here we can see the share performance in terms of 2 dimensions. First, we have the average yearly share price, right? We can see it has declined by 15% per year on average. Massive hit for the investors of Nike. At the same time, we can see that the shares outstanding within the company, represented here in blue in millions, have declined by 1% on average per year, showing us that the company is at least buying back stock and taking advantage of the share price declining each year. Okay, so now we have a sense of Nike's financial performance over the past 5 years. Let's move on to the assumptions behind my valuation financial model just to see how I am forecasting the revenue and free cash flow of the company in the next 10 years, so 2025 all the way up to 2034. And let's start off with revenue. I'm assuming average yearly revenue growth to be 5%, just 5% for Nike in the coming 10 years. And that's lower because in the past 5 years it's been 8% per year. Now that 5% also bakes in the current decline in 2025 of minus 10% for revenue, as that's in line with the company's own guidance. In terms of EBITDA margin, I'm assuming 15%. Over the past year it's been 14%. I think 15% is still achievable for the company and quite conservative. And in terms of EBITDA margin, I'm assuming 20 times. That's of course lower than the 31 times, as I'm decelerating revenue growth all the way up to 2034. Now in terms of free cash flow growth, I'm assuming 6%, so 1% higher than the average yearly revenue growth. Now over the past 5 years it's been minus 5%. Partly due to bad strategic decisions by the leadership of Nike. Hopefully that will turn around, right? That's the whole investment thesis, that the company will turn around and get a grip of itself. Now, in terms of the free cash flow yield, which is how much free cash flow we get as a relation to the share price, I'm assuming 4%. In the past 5 years, it's been 2.9%, so slightly more free cash flow per share. That's in line with the multiple of the company to compress right in the future as growth is slowing down and at the same time as the company becomes more profitable. And lastly, just for full transparency, for my discounted cash flow forecast, I use a discount rate of 10.1%, which I think is quite fair for a company like Nike. And here you can see the detailed yearly growth rates for both revenue and free cash flow that I'm assuming for Nike. Now what's interesting here is first of all 2025. The company will release its full 2025 numbers at the end of June, so it hasn't released those yet. But I'm assuming revenue to decline by 10% for the full year. That's in line with analysts' estimates, and also free cash flow to equity to decline by 30%. So that's a massive hit. However, I'm assuming that this will slightly start to turn around in 2026. I'm assuming revenue growth of 2%, still not high but at least positive, and I'm assuming free cash flow growth of 6%. Now these growth estimates will actually accelerate all the way up to 2029, where I assume 15% growth for free cash flow and 9% for revenue. And then from that point on, it will actually decelerate all the way up to 2034, where I'm assuming 8% for free cash flow and 6% for revenue, just to stay conservative. And using all of those yearly growth estimates, we can actually extrapolate a weighted price target for 2034 for Nike. We have a enterprise value price target and we have a free cash flow price target. And if we weight them equally, we get a weighted price target of roughly $178 per share in 2034. And as I started in the introduction, all of these estimates actually gives us a fair share price close to $128 per share. And this also suggests that the company is 51% undervalued versus its current share price, and that we as investors could get 18% per year compounded return in the next 10 years. And with that said, here we can see how this investment hopefully will pan out. We have to, of course, invest in the stock today, right? That's negative for us as investors, plus any free cash flow that we get the first year. Then we get free cash flows distributed to us each year, right? As dividends, or it could be buybacks or what have you. And then we sell the stock at our price target, plus any free cash flows for that year in 2034. And then we can see here in blue, right? The total gains relative to our initial investment, showing us that Nike as a company could have significant upside for investors even with such conservative growth estimates as I've applied. Now, before I add any stock to my portfolio, I like to do a bear case analysis as well, just to see how bad it can get in case the company I'm looking at cannot perform at the level I'm forecasting in my estimate. So here we can see to the left the bull case I've gone through, right? Now let's assume a bear case. Let's assume that revenue growth actually is only 2% per year and that free cash flow growth is just 0.5% per year. I think this is way too conservative, but it's within the realm of possibility. And if we assume these much lower growth estimates, we get a fair share price of $79 per share. And this is quite impressive because this is still a discount versus the current share price today of 20% and an annual compound return of 12%. And this basically shows us that even though the company does not reach the 5 and 6 yearly growth rates in the bull case, and as long as the revenue and free cash flow does not continue to decline as it's doing right now in 2025, then we as investors could still expect a positive return from the stock, showing us that on a valuation basis we still have some cushioning going into the stock today. Now, a great stock in my point of view is not only a great business and being well priced at the same time, it needs a third element which I call momentum, which we'll take a look at right now for Nike in terms of a technical analysis. And here we can see Nike's share price over the past few years, and yeah, we can see that the stock is indeed in a long-term downtrend, right? So the company does not have any momentum right now. However, we can see that the share price is roughly at the COVID-19 lows, right, in 2020. So basically the share price has reached a quite strong support level here at roughly $60. In addition, we can also see the 200-day moving average, which is this blue line here, right? And we can see the share price is significantly below that line. In general, we want the share price to be above the 200-day moving average. So that's something to look out for in the future, as the share price might cross above that line. That might be a great buy signal. And to conclude, I think this is a great place to start nibble at the stock, right? If you want to start a position and you're interested in Nike and you're bullish around the company for the next few years, I think this is a great level to start off, right? A initial position. And primarily, if the stock price breaks above this downward channel it has been in the past few years, and if the stock price breaks above 200-day moving average, I would incrementally increase my position in Nike. However, if you're still bearish around Nike and think you could get a lower price, this table shows us what happens to the annual return if the stock price goes down, which is green, that's good for us as new investors, or if the stock price goes up, it's showing us that the annual return declines. Now, if we want 20% or above, the stock price has to decline by roughly 10 or 15%, right? Which is still entirely possible. Okay, so with that said, let's move on to my final rating. As you saw before, I gave the company a buy recommendation and a final star rating of 4 out of 5 stars. And yeah, here you can basically see all my key considerations behind that final star rating. We can see that, however, revenue growth hasn't been that strong right in the past few years, and same has been the case with free cash flow. However, we've seen good EBITDA growth. On top of that, we see a very strong valuation case. We have 18% per year, and the company is over 50% undervalued in terms of strong brand and reputation. Yeah, here again, I think that's a strong yes. But in terms of low and legal risks, we have a few short-term pains. We have tariffs coming out of the US, and Nike, of course, manufactures a lot of its products in Asia, so that could be a short-term pain, at least for investors going into the stock today. Thank you so much for watching this video. If you found it informative, please feel free to like and subscribe. And if you go down to the link in the description below, you get the free one-pager, which includes 5 years of financial data, my full DCF assumptions, and the forecast summary as well. So yeah, thank you, and I'll see you in the next one.